Good morning. It's Tuesday, the 4th of June, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. As we go ahead, today is the day votes will be counted for India's parliamentary or general elections, which started on the 19th of April and went through a brutal summer before concluding on the 1st of June 2024. There were 7 phases of elections, and the last were quite deadly, and quite literally so, as heat waves claimed the lives of officials working at polling booths. Some 56 people have died in all from heat waves, including election officials on duty in India's just concluded general election, as I said, on the 1st of June. And many of them died of suspected heat strokes in states like Uttar Pradesh, Bihar, and Odisha in the east. Now, it's quite evident that with heat waves going to get worse, countries like India have to rewrite election schedules in coming years. Now, exit polls have predicted a clear victory for the ruling BJP party in the 543-seat parliament or lower house, in continuation of voters had delivered in 2019 as well, making it a potential and strong third term for the Prime Minister. More details on counting of votes at the end of the show. Now, back to the stock markets. They like continuity, particularly political, and have bet on and projected continuity for several months now. So the top stories and themes for today. Markets are set to rise, but in volatile trade on vote counting day. Oil prices fall further, now below $79 a barrel. How India's renewed plans for a manufacturing thrust could play out. And aviation is set to go places in 2024 with close to 5 billion travelers and $1 trillion of revenues projected.
This is a core report with Govindraj Ethiraj.
Markets hit record highs. The key indices, the BSE Sensex and the Nifty50, clocked their biggest one-day rally ahead of Lok Sabha election results since 2019 or in 15 years. The 30-stock Sensex jumped about 2,507 points or 3.4% to end at 76,469, while the Nifty50 was up 733 points or 3.25% to close at 23,264. The Sensex and Nifty also hit record highs at 76,739 and 23,338 respectively. Many market men are now talking about 80,000 on the Sensex, which at least statistically is relatively near. The core reported and projected a 2% plus jump on Monday morning trade. Business Standard reports that the last time the benchmarks logged their biggest single-day rally ahead of election results was in 2009, when they jumped about 2.46%. So, government-linked or government investment-linked stocks were leading the rally, prompting concerns of overvaluation once again in these areas, and more on that in a moment. State Bank of India was the top gainer on the Sensex, soaring nearly 10%, and this was followed by NTPC, Power Grid, L&T, Axis Bank, Reliance Industries, Ultratech, Cement, and Mahindra & Mahindra. The markets usually buy on rumors and sell on news. The big question is what will happen on trade or in trade on Tuesday. While an up move is very likely, it's also possible that some consolidation and correction could start setting in. Remember, a victory for the current government is priced into the current levels of the market. On the other hand, several macro indicators are set to balance out a possible pullback in momentum. I spoke with Gaurang Shah, Head of Investment Strategy and Senior Vice President at Geojit Financial Services last night, and I asked him how he was looking at market and trade following that big jump on Monday, and what sectors and themes he was more bullish on going into trade on Tuesday, but also for the medium to long term.
Markets were exuberant in terms of the exit poll numbers. One thing that I have noticed, Govind, about exit polls for the last many elections that we've seen, the numbers may vary depending upon what the election commission has to tell you at the result day. This is my personal observation also, Govind. But the direction in which the exit poll guides you in terms of who is most likely to form the government, that has not been shaken up, barring just maybe stray occasions. So I guess Tuesday, 4th of June, the eyes are going to be on numbers. Convincingly, the market has accepted the victory of NDA government led by BJP and Prime Minister being Honorable Mr. Narendra Damodar Modi. So tomorrow, if the numbers are in line with what the exit poll has told us, or maybe a shade better than that, then I think that exuberance is going to last for one more day, that is on 4th of June. And then possibly you will have a little bit of cool off after the news being available on public domain. Discounting starts and then you retrace a little bit. Post that, Govind, there are a couple of points that the markets have not really factored in. One was last week on Friday, we had the GDP number. FY24, the number stood at 8.20. Correct me if I'm wrong. Fourth quarter FY24, the number was 7.80. Not saying that this will reflect continuously, but at least we have a better picture in front of us. Then you have the record level of GST collection. Along with that, monsoon is virtually at our doorstep. And according to the Met Department, if monsoon is going to be long-term average or better, and if rain gods do have to shower their blessings on our Indian subcontinent, then I think there is an added feather in the hat. Then, of course, the budget and the first quarter earnings. So I think markets will start looking at these data points and possibly some news flows from the international market as well.
Right. So what you're saying is that in a way, the markets have obviously already priced in this victory or a potential victory for the BJP, and numbers or the benchmark indices are reflecting that. But where if it could slack off, you're saying the macro cues will start supporting it thereon.
Absolutely. And I think given the kind of, current levels, even if you have to witness a correction go in, and which is very healthy, we've been always advocating that, one-way move is absolutely not warranted for any market, forget about Indian markets. And that correction will give opportunities for all those people who are right now living in FOMO factor, fear of missing out. So you will have buying coming in, and not to forget the FI sell side number, Govind. You are very well aware about what the FI positioning has been for this particular event. So if you have to come in, and tomorrow, God, I don't know. Let's see if we have a better numbers to talk about, possibly by this time of tomorrow. But yeah, that short covering will also lead to some kind of elevated levels. So one needs to be absolutely prepared. But I would also advocate and advise that don't jump into this bandwagon. Patience is always paid off in the markets. Wait for some correction. Let the news get digested. Let the dust settle down. Get a clear picture, and then come back to the market and start investing from a long-term point of view.
Right. So two quick questions then. One is, what's your sense on valuations when you look at some of the sectors, not the whole market? The whole market is quite clear now, but some of the sectors, and where do you see some areas of concern, particularly for those who want to jump in? And secondly, from your own point of view, what are the kind of themes or stocks that you're looking at, or at least themes?
So valuation, I think after today's bump up, definitely things look a little bit richly valued. No denying about that. And maybe I don't know what's there in store for us tomorrow, Govind, to be very honest. So if right now, yes, PSUs are looking a little bit richly valued, given the kind of, there were talks in the market, Modi-nomic stocks, etc., or Modi stocks, etc., etc. So the entire PSU basket, be it capital goods, be it engineering, be it oil marketing companies, be it certain PSU banks, Govind, defense stocks have gone up to a certain extent. Power generation, transmission, distribution stocks have gone up. Infra stocks have gone up related to PSU. So that's where you will find a little bit of more, whatever is gone up in this on Monday and whatever goes up tomorrow, that is on 4th of June, will come back to a rational level. Pockets of opportunity, if you ask me in terms of undervaluation, Govind, then life insurance companies, specialty agrochemical companies, these are the two pockets where I feel there should be some amount of interest. Other than this, I think a renewed interest with respect to government policies for the automobile sector. We all know, and the Honorable Prime Minister has also spoken about making India a global manufacturing hub as far as automobile sector is concerned. There have been announcements with respect to PLI schemes as well. Power generation is something, private sector power generation, and maybe one or two public sector companies. Because if you are going to strive towards making India a global hub in terms of manufacturing, you will definitely need more power generation capacities going. Without power, you're not able to go that. And banking and finance, though some public sector banks are richly valued, but if they cool off, then that's the destination to be. Along with that, my sense is that hospitality sector, given the kind of numbers that the couple of hotel management companies have come and spoken about, and of course the big theme in terms of cement. Broadly, that's going to be about 5-6 sectors. And my advice also would be that try to look at large cap first, go with, then possibly select down on your mid caps. Small cap and micro caps are something that you should avoid.
Correct. And you also said that first quarter results is something which is like the next sort of event horizon, and that's not too far away. We are already in June. So, what's your sense and any sort of early temperature check on that?
I think banking, auto, NBFCs diversified. We as a brokerage house, Geojit Financial Services has been extremely brokerage on defense, though I highlighted that as one of the cautious sectors, at least in the near term. But if valuation comes down, then defense is also going to be a very strong play. Three or four themes just to highlight upon the government policies and what the government has spoken about, along with some commentary from the Honorable Prime Minister. Defense, power generation, that includes power generation, transmission, distribution and power equipments, railway related stocks, and infrastructure. I think if you want to go from now to the next level of 8.5 and maybe 9% GDP growth rate, go with, you need to upgrade your existing infrastructure and you create a lot. So infrastructure related companies will also do.
Right. And you're saying that your sense of first quarter results is that they're all looking on the stronger side right now?
Yes, given the fact that the kind of backdrop we had in terms of earnings, expectation was that we might not do as well, but at least now that the curtains are down for the last quarter, fourth quarter, last financial year, Govind, there has not been any large dark spots or red flags, and there is a scope of improvement to a great extent.
Right. Gaurang, thank you so much for joining me.
Thank you so much, Govind. It's been a pleasure.
Meanwhile, the rupee ended at 83 rupees 14 paise against the dollar, rising nearly 0.4% on Monday to mark its biggest single-day gain in more than 5 months, said Reuters, which also added that the benchmark 10-year government bond yield ended at 6.9%, its lowest closing level since April 2022, down 4 basis points on the day. Oil prices slump again. Oil prices fell again. We did report a slump yesterday too after the Organization of Petroleum Exporting Countries Plus unexpectedly said they would restore some production to the market this year, adding to a bearish momentum crude has been experiencing for months, according to Bloomberg. Now, this means that instead of the supply cuts that were supposed to be extended, the OPEC countries would pump more oil, thus adding to supply, and not surprisingly, crude oil prices fell after that. Global benchmark Brent crude futures slipped as much as 3% to dip below $79 a barrel, while West Texas Intermediate or WTI fell below $75 a barrel. Both benchmarks are at their lowest prices since February, according to Bloomberg. Apparently now, OPEC and its allies will start rolling back some production cuts starting in October, earlier than many market watchers had expected, and the curbs will continue in full till the third quarter before gradually phasing out over the following 12 months, and that's, of course, as things stand today or are being projected out. Oil prices have been soft in the last 2 months as geopolitical risks appear to have lowered, as has demand. Bloomberg quoted Goldman Sachs saying that the OPEC Plus decision was bearish given a recent increase in inventories, but UBS Group, AG, and RBC Capital Markets have expressed confidence that the alliance will maintain control of the market. Most analysts, as we referred to earlier, had expected OPEC Plus to extend the curbs through to the end of the year. India's manufacturing thrust could get a leg up. India's Prime Minister Narendra Modi plans a raft of business-friendly measures if he wins a third term today, including pushing through regulations making it easier to hire and fire workers, government officials told Reuters. In what appears to be a clear manufacturing thrust and also flows with what markets in general are expecting, if you just heard Gaurang Shah of Geojit, the government will offer subsidies for domestic production modeled on recent packages for semiconductor firms or chip companies and electric vehicle makers, according to those officials. At this point, less than 3% of global manufacturing takes place in India compared to 24% for China, Reuters said, quoting World Bank data. The government plans to increase India's share of global manufacturing to 5% by 2030 and 10% by 2047, according to documents seen by Reuters. The Indian government also plans to reduce import taxes on key inputs for locally made goods, which have pushed up India's manufacturing costs, according to those officials. Now, this will be significant because if it happens, it will be contrary to current trends because tariffs have tended to rise and stay there in recent years. Prime Minister Modi's re-election campaign was partly built on the promise of continued economic development, and he's pitching India as an alternative for global firms diversifying their supply chains from China. Manufacturing capacity is obviously key to addressing the larger jobs challenge. India is the world's fastest growing major economy, but that includes a booming tech sector, and a struggling older economy that doesn't provide enough jobs for everyone else, according to Josh Feldman, the former head of the International Monetary Fund's office in India, who spoke to Reuters, adding that what can be done now to provide employment is good jobs for these people, and that is manufacturing. Airlines set for bumper year. The International Air Transport Association, or IATA, has announced strengthened profitability projections for airlines in 2024 compared to its June and December 23 forecasts. Here are the big numbers, and this is something that India is going to play an important role in and benefit from. With close to 5 billion passengers in 2024, a record high, total revenues for the industry are expected to touch almost $1 trillion or $996 billion, with net profits expected to be around $30 billion for 2024 at a roughly 3.1% net profit margin. Total air cargo volumes are expected to reach 62 million tons in 2024. Passenger revenues of the total 1 trillion that we spoke of are expected to touch about 740 billion in 2024. That's up 15% from $646 billion in 2023. Revenue passenger kilometers are expected to be about 11.6% higher, and the longer-term 20-year growth trend is expected to see passenger demand grow about 4% or 3.8% for the 23 to 43, that's 10 years. And passenger yields too are expected to strengthen 3.2%. Now, some of these numbers may not be so specific to India, but you can rest assured that India is leading some of this, because the projections for India's own growth, with more than 1,000 aircraft expected to come in to Indian skies in the next few years, obviously contributing to all of this. The average passenger load factor is expected to be around 82.5% in 2024, largely in line with pre-pandemic levels. That's 82.6% in 2019. Weather disruptions continue to hit India. We've already talked about heat waves and the loss of lives because of it, and now record-breaking rainfall on Sunday causing widespread disruptions. Bangalore shattered its 133-year-old record for its highest single-day rainfall in the month of June. The city received about 111 millimeters of rainfall on Sunday evening, making it the highest ever rainfall in a single day in June. And here's how the votes will be counted. Votes for Lok Sabha elections 2024 will be counted on Tuesday, June 4th. That's starting this morning. The counting will also include the simultaneous assembly elections in the states of Odisha and Andhra Pradesh, as well as by-elections for a few assembly seats in other states. The votes for the state elections in Sikkim and Arunachal Pradesh were counted on Sunday, the 2nd of June, and are thus out. According to the Election Commission of India, the counting of votes for the 2024 Lok Sabha election and the state polls will begin at 8 a.m. on Tuesday, June 4th, and will continue until the last vote is counted. The core report, as you are aware, is out at 5 a.m. on weekdays. That was the core report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in, and thank you once again for listening.